out. Just try to record a little. So if you have that paper, just get it closer. August 2018, question 3. Just shortly. All right. Thank you to all those that have just joined us. We are doing a financial accounting revision. And today we want to interest ourselves with this paper, August 2018. And I said we shall start with question 1. Yeah, question 1, because it gives us an insight into the overall accounting. The members in here have proposed some different topics that we shall include in mind when we are designing, though our interest is to have all the topics revised during these sessions. So the question 3 is saying the trial balance was extracted from the books of Njogo Transporters Limited as at 31st December 2017. In addition to provision of transport services, the company owns a garage that offers mechanical services to other companies and lets out part of the business's backyard. So we have cash, we have bank, we have share capital, we have retained earnings, we have transport fares, we have mechanical services, we have interest on investments, we have buses, computers and engineers, and computers and printers, furniture, garage equipment, land, repairs and maintenance, salaries, utilities, insurance premium, fuel, rent expense, we have license fees. Then we also have provision for depreciation. We have buses, we have computers and printers, we have furniture, we have garage equipment, we have compensation for accident victims. We also have court penalties. Now, when you look at this question, even before we could proceed, this is Njogo Transporters Limited. When you get a question, even before you go through what we've done, it's because I've already did it. First, find out what exactly are they looking for. So this question wanted us to prepare journal entries for additional information 1 to 5 above. Okay. So, and they also wanted us to prepare a statement of profit and loss for the year ended 31st December 2017. So I go up. So I know that I've been given what is called a trial balance, because as you can see, it has the debit and the credit. So mine is to find out the kind of information that I'll really need for the questions that have been asked. Now, of course, good for you to know that not every information that you've been provided with will really be useful. Some of the information provided is just to give a broader view of the organization, but you may not need to use it. So they have given us additional information, and this additional information, when you get down here, they're asking us to prepare journal entries for the additional information. So I hope you have your pen and paper. You'll be able to note down some of the things. So additional information 1, they're telling us that shillings 8 million worthy invoices issued to tenants for subletting of the parking yard was outstanding by the end of the year. This has not been incorporated in the books. Shillings 8 million worthy of invoices issued to tenants for subletting the parking yard was outstanding at the end of the year. This has not been incorporated in the books. Now, when you go up, you realize that there are certain sources of revenue to this company. Let me just try to see if they have anything to do with subletting. Mechanical services. I would definitely look for revenue from the credit side, because revenue has a normal credit balance. So if I want to find out if there was any kind of revenue on subletting that was recorded, then I would actually look at the credit side. So as you saw, they have transport fares because it's a transport company. So they have a transport fare as one of their revenues. They also have mechanical services. This is also revenue. They also have another income, interest on investment. So that is also something for you to note. So I get to realize that there is actually no revenue that corresponds to this unless you yourself you see it. So since this is revenue, because if you're subletting your parking yard and you have tenants to you and you issue them with invoices, then that is revenue to you. So this was not recorded in the book. So since it's additional information, and these were invoices and these were still outstanding at the end of the year, we refer these to as accrued revenue. So we are going to accrue this revenue. We are going to accrue this revenue. So what we do when we are accruing revenue, now, revenue has a normal credit balance. So for us to recognize this 8 million as part of our revenue, then we have to make sure that this kind of revenue is credited on the revenue account. Now, we shall call this maybe rent. This could be rent. This is rent income. So we will credit our rent income and debit the accrued rent account. Debit our accrued rent account. Now, what we are debiting is actually a current asset in our books, because at the end of the day, we expect that we are going to receive this amount of money when the next financial year starts. Remember, this financial year that we are looking at here, these books are as at 31st December 2017. So I presume that by 2018, 1st January, we'll be having this under an opening balance, and we know that we'll be able to get payments coming through for this. So that is how we would handle that. So I hope you've basically noted that. So I said we'll credit our rent income as a recognition of revenue, and then we will debit our accrued rent account, or you can call it accrued rent income, whatever you call it, and then you leave it at that. Now, in most of the questions here, they have asked us to prepare journal entries. Now, somebody would ask, when they ask me to prepare journal entries, what do they exactly mean? Now, when they ask you to prepare journal entries, basically what you can do is, let me just try to stop share this and maybe use an Excel to demonstrate to you what you can do. Journal entries, when somebody says journal entries, they are trying to look at the debit and credit, basically. So, but you can go ahead to present it in maybe in another way. Maybe, let me use this, maybe like this. So if this is my screen, I hope you can see my screen. This could be maybe detail, or we can call it account. Detail or account. And then you can have here your debit, and then you can have your credit. So for example, for question 1, we are saying that our first account is, we are going to debit. So we are debiting our accrued rent income by how much? By the amount that is there. The amount here is 8 million, to be 8 million. you can do 8,000 and then you put a degree of precision in the bracket. 8 million. So these are thousands. Shall call these are thousands. These are thousands like that. And then we have our rent income. You can either call it sub-rent income, whatever, but the principle is the same. Sorry, I needed not to put it there. It is right here. Okay, so that is how you basically try to represent it. You can try to do this as a table, basically, but it's the same principle. So back to our question that was trying to, I think that is our question. So that is how you can do it, or you can rather do write sentences, debit this and credit that. Okay, then they are telling us that shillings 40 million and shillings 620,000 in salaries and mechanical services respectively were prepaid by the end of the year. Shillings 40 million and 620 in salaries and mechanical services respectively were prepaid by the year end. Now, 40 million relates to salaries. 40 million relates to salaries. So since they were prepaid at the end of the year, it means that this is a prepayment. So when you look at our salaries here, we have 340 million. So if they say that the 40 million was prepaid, what means that we have to make adjustments onto our salaries amount. So what we shall do, prepayments, how we account for prepayments is we shall debit our prepaid salaries account. We shall debit our prepaid salaries account and credit our salaries account. Credit our salaries account. I hope you get that. So you should have noted that. Now, not so different from the mechanical services, because mechanical services now, as 40 million relates to salaries, which we are saying that the 40 million is prepaid. Now, when an expense is prepaid, we have an asset, and that's why we are debiting our prepaid salaries. So that is an asset in this place. Now, for mechanical services, when you scroll up and look at this question very well, you get to realize that this company, mechanical services, is revenue to them. Is basically revenue to them. So as the 40 million, it is us that we paid in advance. Maybe our employees asked for this money, maybe to settle their current problems, and maybe they indicated that you deduct this from our salaries. When it comes to the mechanical services, this amount of money was paid by our customers. So as we have debited our prepaid salaries here and credited our salaries, this would be the reverse. Because in this case, when we have clients paying in advance for the services we offer, in this case, we have a liability, because by all means, we have to serve those clients. And that is why we will have, in this case, we'll have, of course, the these mechanical services, what we shall do is we'll have two accounts. So we have the mechanical services, since it is called mechanical services app, as an account. And then we shall also have, of course, yeah, you can you call them you call them prepaid? Now, of course, you can call them prepaid, but you know, when you use the word prepaid in your books of accounts, it's like it is you who paid. You get it, eh? So sometimes we say income received in advance, maybe mechanical services, income received in advance, whatever it is. But if you indicate it as prepaid mechanical services, it's also fine, because it's also just like the way you could see MTN. You can see if you look at their books, you see something like prepaid. So you can also call it prepaid mechanical services if it doesn't confuse you. So in this case, we shall do the reverse. We shall credit the prepaid mechanical services, because in this case, it's actually a liability. And then we shall debit our mechanical services. Now, the reason why we debit our mechanical services is to mean that these mechanical services that we are seeing here in our trial balance, the 45,620, means that they include, like you see this 620, they include a portion that is actually prepaid. So clients paid in advance, but because of maybe the accountant who's recording these books, these things in our books of accounts, maybe didn't understand how to allocate these different amounts, or maybe the other additional information was only realized at the end of the year. So because it's 45,620 here, we are going to debit this account. You know very well that in accounting, when you debit an account that has a credit balance, you're like reducing it. So that is why you see that in this case, we are going to debit our mechanical services, so that we basically reducing that 620. So that is how the principle is. So basically, that is what will exactly happen. So the same thing with this 40 million. So for the salaries that you're seeing here, ahead, I think you'll see that these salaries, they have a debit balance. So they are saying they are 340. And they're telling us already that 40 million relates to some kind of salaries that were prepaid. That's why we credit it, so that we are reducing it by this 40. So you should be able to note that down. So if you have any question, please use the chat box. I'll be able to give more clarification. Then question 3, or part 3, says that included in the amount for transport fares. Included in the amount for transport fares. Now, transport fares, I think this is revenue. They are saying shillings 10 million received from HTT preparatory schools to transport pupils for a tour to Kigali, Rwanda. They are saying the tour was slated for 14th January 2018. Now, yours is to go back and look at which accounts am I looking at, and which period do they end at. So we are seeing that the accounts that we are looking at now end on 31st December 2017. So if they are telling us that the transport fares, let me just try to look at the transport fares. If we have that account in our books here, must be part of our revenue. Yes, as you can see, they have even put note 3 in the bracket. So since they are saying that part of that transport fares relates to the 10 million, relates to what was received for HTT preparatory school to transport pupils for a tour to Kigali, Rwanda, and the tour was slated for 14th January 2018, means that this amount of money is actually prepaid also. It's like income received in advance. So these are like transport fares received in advance. You can also call them prepaid transport fares. The reason why we are calling them prepaid is because the tour is slated for a period that is totally away from the accounting period that we are looking at, the one that is ends 31st December 2017. Yes. So what we shall do, not very different from mechanical services, not any different from our mechanical services. We are going to find ways of how to reduce this 2.605950. And since it has a credit balance in our trial balance, it means that we shall debit, because if we go with this amount, it means that we are going to overstate our revenue from transport fares, because a portion of it relates to the next financial year. So we shall debit our transport fares account with the 10 million. Shall debit our transport fares account with the 10 million. So you go to our table that we drew and change where there is you put transport fares debit, you put then the credit, you get it. So that is what will definitely happen. All right. And then what will be our credit account? What will be our credit account? Now, our credit account, like I said, this could be transport affairs received in advance account, or you can call it prepaid transport fares because they relate to the next financial year. Yes. So I hope that that sticks well within your mind. So we move to the next one. They're saying 2.5 million for compensation for the loss of passengers' luggage that was in the company's custody has not been paid by the year end. 2.5 for compensation. 2.5 for compensation for the loss of the passenger luggage that was in a company's custody had not been paid by the year end. Now, when you go ahead now, compensation for loss of passengers' luggage is an expense to the organization. Maybe that is within their terms and conditions. But when you look at our trial balance, the compensation that is there is actually for accident victims. So if there is another compensation for loss of passengers' luggage, then we will make, of course, we'll make an accrual for it, because if they're indicating it here that it is yet to be paid, then we shall go to accrue for this. Yes. So we shall debit compensation. We shall debit the compensation for loss of passengers' property. I think we can say maybe just like the way it is here. This is a compensation and this is accident victims. So we shall have another account for compensation for luggage loss, let's say. So we shall debit it. Reason why we debit it is because it's an expense. expenses are always debited every time they increase. So we shall debit that, and then we shall credit accrued compensation. We shall credit our accrued compensation. So I hope that is clear. I'm not writing because I just don't want to get off this screen. And I trust that you guys that are following have actually written these things. So we have question or item 5. Now, item 5 is saying the bus depreciates non-current assets as follows. 1, 25% on costs. Computers and printers, 20%, reducing balance. Furniture, 15% on cost. Garage equipment, 30%, reducing balance. Yes, those that have just joined us, we are trying to look at a question here of August 2018. August 2018. And this question requires us to journalize the additional information that they have given us. But also, this question had a trial balance provided ahead of here. This is our question 3. And the questions are the ones that we are trying to respond to. So we've done item 1, 2, 3, and 4. And now we have item 5. Now, item 5 is speaking about depreciation. So what I'll do, I want to first stop share. And I want to go to the Excel where I want to calculate. Like I indicated, this could be the format that you can use for the question 1. You just start 2, 3 like that and keep inputting that kind of information. So can I confirm that you can see my Excel? Can somebody confirm that you can see? You can either use the chat box.
Yeah, we are seeing it.
Yes.
Okay, fine. Sorry. I tried to mute. Apologies. So I was saying, can you see, do you see the PDF or you see the Excel?
Excel.
You see Excel, huh?
Yeah.
Okay. Okay. So I don't know if you people have this question. Let me just first go back so you maybe you can take some screenshots, because this question requires us to get information from here. So what we are looking at here are buses. So ours is to go back in the trial balance and see what is the cost of the buses. So as you can see, this question gives us provision for buses, computers, and furniture and gas equipment. And then it also gives us the values. It is giving us the 8 million, the 80, and the 10. Now, somebody would ask, How do I know that this is cost? This is our net book value. Now, when we are drawing up asset accounts, we draw up a separate asset account that records items on cost. And we then run another account, which is the account of accumulated depreciation, which at times we refer to as provision for depreciation. So when every time you see the word provision for depreciation, it is the same thing as accumulated depreciation. Now, for buses, they have told us that buses, the depreciation is on straight line. Now, if you've been through a class of straight line depreciation and reducing balance method, you come to realize that if it is straight line, we subject the percentage of depreciation on cost alone. I repeat, for straight line depreciation, we subject the percentage on cost alone. So for buses, when we are calculating our depreciation, we shall subject it onto, sorry, I don't know what I did exactly. I don't know what I did. Okay, it's gone off. So for buses, the value is 8,017,000. 8,017,000. So we just do directly, we just get the 25% times our 8,017,000. So if I'm just trying to do it in my Excel here, I'll just get my 25. Okay, 25 is my percentage on my PC here. Okay, 25%. This is my depreciation percentage. And then I have my cost, which cost is 80. Is it 8,017,000 like that? I don't know. Let me just try to check and see. Okay, I think maybe I made it. Okay, that is how it is. I may just want to confirm that now the values that they have given us are actually in thousands. No, sorry. I think I'm going to try to look at another bar here. Okay, I think that is the value. These values are in thousands. So if I'm calculating from another place, I want to make sure that I'm either put a degree of precision here and say that maybe these ones are in thousands, or I include it on the value, not to confuse the examiner. So I go on to press on my calculator, but since this is Excel, I'll just do that. So I'll get 2,000,4,250 as my depreciation. So this is my depreciation. Something like that. Okay, so that is what will happen with the buses. So when we look at the next part, what is the question? Sorry, I have a paper here that's confusing me. Let me just try to close it. So we want to look at the next part of the next asset. The next asset is computers, and computers is on reducing balance method. Now, for computers that are on reducing balance method, computers and printers, what will happen is we shall look out for the cost, We shall look out for the cost. The cost is 80,000, which is 80 million, because the degree of precision is 1,000. So we shall get the 80 million, which is the cost. Yes, these are cost values. As long as you know, some people they only run one account. So if you check a trial balance and you don't see any accumulated depreciation somewhere or provision for depreciation, then it is presumed that the values that you see on assets are usually net values. But for our question here, we realize that actually we have provision for depreciation. So for computers, we shall get this provision for depreciation, which is our accumulated depreciation, 20,000, and subtract it from this value. The reason why we do that is because we want to find what we call the net book value. We want to find what we call the net book value. Because when we are using the reducing balance method, we subject the percentage of depreciation onto the net book value, which is also called the carrying amount. So the carrying amount for computers and printers is the 80 million minus the 20 million, which definitely gives you 60 million. So 60 million subjected to our percentage of 20% gives you 20% by 60 million gives you about 12 million. With your simple mathematics, 2 times 6 gives you about 12 million. So 12 million will be your annual depreciation for computers and printers. So I will not do that in Excel. I hope you can easily do that on your side. And like I said, to all those that are listening through or you're watching a replay of this, every time you're in such a class like this, please get a pen and paper so you're able to capture some of the things that I keep sharing here for your revision, but also for your understanding. Remember, when you write down, you're able to understand better because you write down in the language that you understand. All right. So that is what happens with the computers and the printers. Now, the other is the furniture. Now, furniture is at cost. So if something is on cost, this is a straight line method that we are going to use here. So yes, that's why you say here they are not saying on straight line. Somebody will say, why are you using a straight line kind of depreciation? By them saying depreciation is on cost means that if we want to find the depreciation, we shall do 15% times the cost. So when you go back to our question here, you realize that furniture is 10,000, which is 10 million because the degree of precision is in 1,000 based on here. So if they are telling us that this 10,000, that 10,000 down, if they say that the depreciation on that 10,000 is 15% on cost, it will just be 15% times the 10 million, which is the 1.5, 1,500,000. That is 15% of 10 million. So that is what you do, but you calculate, you don't do these things in the head. You get down, you write if depreciation percentage, 15%. Cost is 10 million. Then you say calculation of depreciation. Depreciation will equal to 15% times the 15% times the 10 million, which is the cost. You get it? Yeah, so that is how you would calculate. Now, the last one that we have here is the garage equipment. The garage equipment. The garage equipment is at 30% on reducing balance method. Now, guys, we are using these things directly because even in the additional information, we didn't have anything that talked about some of these assets. In case these assets had, for example, been disposed of somewhere, somehow, then it would be required to actually do adjustments to make sure that whatever we are subjecting on are the existing assets within that financial period. So since this is at 30%, it means that our interest will be now to find the cost and the provision for depreciation, which sometimes we call accumulated depreciation, get the difference and then subject it to 30%. So if I move up and look at my garage equipment, my garage equipment is 180,000. It is 180,000. I'll look for the provision for depreciation, which is 45. So we have 180 up, and then we have 45 here. Now, when you subtract 180 minus 45 gives you 135,000. So 135,000. 135,000 is the net book value. So now the net book value is the one that we are going to subject to the 30%. The net book value is the one that we subject to the 30%, which is our reducing balance method. So when you subject 30% on 135, you're able to get 40500. You're able to get 40500. I hope you get the same. 4,000 for, is it 40,500? 40,500. So you're able to note this on your answer sheet. Write the cost, write the accumulated depreciation, your provision for depreciation, get the net book value, or what you can call your carrying amount. After you've gotten that, then subject 30% onto that value, then you're able to get your depreciation. So that is what will happen. I can try to demonstrate this since I did something for the other. So for that item, which is garage equipment, my garage equipment, what will happen here? Okay, I'll have I can have my depreciation percentage here. I'll have my cost. I'll have my now I'm so much interested in the accumulated depreciation. In this case, they call it provision for depreciation. Provision for depreciation. And I'll need my depreciation, which is going to be a computation of the other. So this was 30%. The cost was 180,000. Trying to remember. And then this was 45. Okay, was this 45,000? Like that. Oh, is that right? Just try to confirm from the question. Yes, 45, and then the other was 180. Right. Okay, I can even add another column here just to get the net book value. Net book value. You can do this horizontally or vertically. depending, you may not have enough space like the one I have, so you can just do it down. So I'll get my net book value like that. Yes. So after that, now I'm going to use my calculator to multiply this times that. So I can use Excel, which is my calculator now, and get my 4,500. So that is what I was trying to mean by using my brain to calculate. So that's how my question would look like. You get it? Yeah. But what you can do also, for you not to miss any marks, please put the formula there. You get it? Put the formula there. And maybe say this is equal to the depreciation percentage. Maybe times depreciation percentage times the net book value. Times the net book value. You get it? So the examiner knows how you've actually gotten the 4,500. But that is on your paper. If you're answering, if you're doing, for example, an ACCA exam where you expected to use Excel, then you can do some of the things that I'm trying to do here. But for CPA purposes, then you go ahead. Somebody says, kindly repeat computers and printers. I missed something. Okay, I'll try to do that. So for computers and printers, when you look at the question, the question tells us that computers and printers is on reducing balance method. When you look at the question, it tells us that computers, not any different from garage equipment, is on reducing balance method. So you just try to fit in the information provided, because for computers and printers, they gave us 80,000, which is the cost. I said, since we have provision for depreciation, in case you have another account, you have a balance up and then you have a provision for depreciation, then you know the other is cost and then this is depreciation. Then we have 20,000 here. And then they proceeded down and they gave us 20%. So what you just do is what we've just done. You come here, these are computers and printers. Your depreciation percentage is this is 20%. So this is 20%. Okay. Just try to put the percentage here. Your cost was I think 80,000. Let's try to make sure that these ones have it for that. So 80,000. This was 20,000. Let's try to make sure that these are also in thousands. So net book value, the difference, this minus this, 60,000. And then the depreciation is just subjecting it to the percentage, 12,000. So it is that very simple. So you have to differentiate between the straight line, which is on cost. With on cost, you just subject the percentage times the cost, and then you get the depreciation. So basically that. Now, remember, our question didn't ask us to calculate these amounts, but we shall need them when it comes to question 2, and of course, question 1 as well, because every time you do journal entries, you need a value on your journal entry. Now, how we account for depreciation recognition, if I'm here, and this is depreciation, this is maybe this is the 5th line. I already guided you on how to do the other lines. If this is depreciation, and I'm doing depreciation for buses. The reason why I'm doing separate accounts is because even the information they have provided us has separate accounts. So I'll say depreciation buses. So what I'll do, I'll debit my depreciation account for buses. By how much? By what I got. What did I get? I got 20. Yes, I got that amount. So I'll debit this with the 2,000,450, and I'll credit the accumulated depreciation account. I'll credit my accumulated depreciation account. Now, since this question calls it provision for depreciation, I also want to call it the same. So instead of calling it accumulated, it's the same thing. No one will really penalize you. But since the question calls it that, then you, so provision for depreciation for buses. Okay, so I'll credit with the same value, like that. I'll credit with the same value. And then I'll do that for the rest of the assets. If it's garage, I'll come here. Since I'm using Excel, I'll just try to simplify my work a little. So I'll have garage. I'll also have garage here. So garage had depreciation of, now this one, because I left out the 3 zeros. So it means that even since I already have also a degree of precision here, I have no worry. So I'll carry it the way it is. I just want to confirm that for what? For buses, it's the same thing. Just want to confirm that the 8 million is net of the 3 zeros. Just to confirm. It should be this. It should be the story. Yes, for the buses, it's 8 million. That is the value even after removing the 3 zeros. Sorry. Okay. So that is how we record our depreciation. Debit depreciation and credit provision for depreciation. So that is how we shall do. So somebody says thanks. So I hope that is helpful. So friends, we've been able to successfully do the journals of 1 to 5. So what we are remaining with is question 2, that is asking us to prepare the statement of profit and loss for the year ended 31st December 2017. This was a very simple number that somebody can get 20 out of 20. So we are going to proceed to our statement of profit and loss. Now, this statement of profit and loss is also, some people call it the income statement. Yeah, by the same principle. So when you look at your trial balance here, there are things that you know that you have definitely appear in your statement of profit and loss. One, of course, is the heading. The heading. Njogo Transporters Limited, NETL, statement of profit and loss for the period ended 31st December 2017. When it comes to the statement of P&L, we say for the period. Actually, even here, they have even given you, you can even say for the year ended. If it's a balance sheet or a statement of financial position, we say as at. So we say as at 31st December 2017, because the statement of financial position, we're trying to look at the cumulative value of assets, liabilities, and equity as at that time. when it comes to the P&L, we are trying to look at the revenues and the expenses for the company for that period. So when you have your trial balance and you have your additional information which you've taken care of, the next thing you do, proceed, is to, just a moment. The next thing you do is to proceed and draw up your P&L. Your P&L. So we are going to start. Let me just try to, now let me just try to, for me not to keep getting back here, you can take a screenshot in case, just so that we can be able to follow through together. So you know very well that when you're drawing up your income statement or your P&L, your interests are in the revenues and the expenses. The revenues and the expenses. Now, you also realize that there are companies that are into services, and there are also companies that are into selling of goods. Now, you'll get to realize that the P&L for a service business will be a bit different from the P&L of a company that deals in stock, buying and selling. Because, for example, here, we don't have things like sales. We don't have a sales value here because to them it's income. They have given us the different sets of incomes that they have. We also don't have purchases. So we are not going to do sales, maybe maybe sales returns, and then do cost of sales, and then do maybe opening stock, add purchases, and less closing stock. We shall not go in such details, I presume, because this is a service company. So our interest will be just look at the respective revenues. We shall look at the respective revenues. After that, we shall go ahead to look at the expenses that we do have. All right, as simple as that. So I'll just go to my Excel. Just try to create an Excel here. So before I proceed, you're part of this class because this is one of our free classes. Either you're watching a replay of it as well. We are running these classes up to the September exams. We feel there are students that feel like it's good for them to learn, especially during this time. So we are running these classes for the next sitting. So these are basic revision classes, and we welcome students to join them. So for you to join these revision classes, we've discounted our value, and we've only priced them at 100,000. So imagine you only pay 100,000 and you access all our trainings for this revision class till when the next sitting of the exam. So I encourage you, if you're part of this live class, or you're watching a replay of this, or watching this from somewhere else, I encourage you to reach out to me and I will be able to support you. You may have joined the link and maybe you've not seen my number, but you can note this number, 070-380-3255. That is my number. That is my number that you can send me a WhatsApp on. You make sure you add the 0 there. Then I can give you more details on how to join the other full-time class. I would love to have all of you join in the class. So 070-380-3255. I want to say that we would have priced this paper a little higher because we have several classes that are happening, but we understand and we made this a little cheaper. Now, that is for those that want to join the revision class. We also have the full class. By full class or normal class, what I would mean is, you see this, for example, here, we just started from a question and we jumped into an answer onto it. Now, when you join our normal class, we take you through the principles from zero for you to make sure that you understand in and out exactly what why we do certain things some certain way. So that, and that we've prepared that class for the beginners. And for that paper, for the NAT class, we charge 200,000. That is for students who are just fresh and want to learn through. We also do revision. We offer revision classes for them as well. But this class is specifically for those that have maybe studied before and you just want to improve your skills in financial accounting. So I wanted just to make that clarification there. You get it, huh? Yeah, so that is the contact of your tutor. Make sure, in case you have a friend whom you want to recommend, please recommend them and let them come and study. At the end of the day, we want to make sure that we study, we learn, we pass, we become successful accountants at the end of the day. Okay, so back to our question. We are looking at question 3 of August 20. Is it August? Let me just confirm. Yes, August 2018, question 3. And it is in Njugu Transporters Limited. So it is in Njugu Transporters Limited. So that is the name. Njugu Transporters Limited. So we are drawing up. They have asked us to draw up Njugu Transporters Limited statement of profit and loss for the year ended 2017. So Njugu Transporters Limited, NTL, easy statement of P&L for that period. I will not wrap and text because of certain reasons. Okay, so that is our simple heading. The keyword is for the period, for the year ended, or for the period. Yeah, whatever you like. So since this question, let me just even do that. So since this question is requiring us to do the P&L, shall go back onto our question here and tick out the revenues that we are going to take. So on our question, we have different revenues. So when you look at cash, of course, cash is not revenue. Cash is cash. Cash is a current asset. Bank is also a current asset. It's only a current liability if it was a negative, it was on the credit side. Share capital is share capital, as it's called, it's equity. So in case we had the balance sheet, then that is where the share capital would fall. Retained earnings, the retained earnings, this one will also appear in the statement of financial position or your balance sheet. But for retained earnings, this would need to be adjusted with the profit that will come from the statement of P&L that we are going to prepare. Before you put in the balance sheet, you'd have to update it, because these retained earnings are like the cumulative retained earnings for as at 31st December 2016. So you update them with the next one. Most of the questions will ask you for balance sheet as well, but because of this question, when you look at the way it was composed, already the 9 marks are off for part A, so the examiner felt they should only ask one part, which is asking you to prepare the P and L. So our first revenue is transport fares. That is our first revenue. So that is the 2,605,950. But for you to remember that you did a journal entry, on this note, and you adjusted the transport fare. The adjustment you made is because this 20 million relates to the next financial year. So it means that the amount that we are going to take to our P&L. Now, what you do, for you to show the examiner where you're getting this, it's good for you to draw up, let's say, the account for transport fares. You draw up the account for transport fares and make that adjustment and get the new value. So the journal entry we made debited our transport fare to reduce it by 10 million. So when you get this amount, this 2605, the 265,950, 2,605,950 thousands. Remember, there is a degree of precision of thousands. Or if you're just calculating it with 2,605,950, if you want to just remove the electricity, so you remove, since the other is 10 million, you remove 10,000 off it, you remain with 2,595,950. You remain with 2,595,950. So that is what you remain with. So that is what happens with. So I'll just try to go back to my Excel there, where I'm going to have my revenues as the first subheading, revenues, or you can call them income. Income or revenue, it's their revenue or income. We have I can have here my degree of precision. I'm going to also use thousands, since the question also does the same thing. Wow. I want to, I don't know how this will allow me. Let me just try to do text here. So I'll do this and say it is text to enable me do whatever I want to do with this. So I can put it in bracket so I don't confuse the examiner. So I'll have like 3 columns there. So I have my revenues there. So the first one that I'm trying to look at is the transport fares. These transport fares, my transport fares. And what I'm trying to say is that this transport fares has an adjustment onto it. What I was given in here, what I was given here, the 2,605,950 has an adjustment onto it. Maybe I can try to use this column. So this 2,605,950, I'm going to adjust it by the 10,000, and I will get that amount of money. Yeah. So that is my transport fares. Then the next one, I hope there's no other adjustment on transport fares from the information That was the only one that was adjusting transport fares. So the next I have is mechanical services. I have mechanical services. So my mechanical services, just to confirm, it is 45,650. Mechanical services is 45,650. 45,650. So that's what I'm trying to mean. It's 45,650, but it had additional information as well. These mechanical services, 620 was prepaid. So 620 also related to the next financial year. So since it was prepaid, it also needs to be subtracted from. So mechanical services, the 45. And I come here, I have to reduce it by 620. I'm only reducing it by 620 because the other one is in additional information and the other one is in the trial balance, which has a degree of precision. So it gets me to 45 that. Okay. So you can do that calculation outside, or maybe you may want to, just a moment. You might want to do it here, because here in this Excel, the examiner will not see this, because this is I'm just doing it because this is Excel. So you can try to put it in bracket, or you can have a working somewhere just to show that you're subtracting this from this and getting that amount, so that the examiner doesn't wonder where you got the amount. You know, when you want to get some of these marks, you don't want to assume that the examiner knows that whatever you put in the journal entry, you just subtract it here. Indicate it there so that the examiner can know, so without any excuse, especially for such a question like this, because we want to get all the marks and not leave anything unturned. So mechanical services was the other kind of source of revenue for this company. The question should be, do they have any other sources of revenue? So when I look at this paper, looking at the credit side, remember I said share capital and retaining earnings, all these will go in the statement of financial position. We now have transport fares and mechanical services, which we've already adjusted. Now yours is to find out if there's any other revenue, which I'm not seeing apart from the other income. Other income, which is the interest on investments. Interest on investments. Now you see, sometimes this interest, they can either include the word on investments, or they can say, okay, just interest. As long as you see interest on the credit side, then you know that that is an income. If this interest was on the debit side and it just said interest and they put it on the debit side, then you know it's an expense. It's actually interest that has such kind of interest. What else can be can also confuse it? We've even seen from mechanical services, somebody may think this is an expense, but as long as it's on the credit side, then it's an income in its own. So apart from the 82,600, let me just try to confirm that there's no other. These are the provision for depreciations, which you already used. When you move down in the additional information, we don't have any new revenue that we have. So I'll only take the other income, which is the interest on investments. So I'll just try to stop share that and move to here. So when I move here, before I can put that, I'll just say total revenue. I'll first get my total revenue. Total revenue. The reason why I'm getting total revenue here is because the other income is just other incomes, but the revenue that's generated by the company directly is that. So then I say maybe other incomes. Other incomes. I now have interest on investments. If they are just called it investment, then it would be on a debit, like on the debit side. And in that case, it would be an asset. But since it is interest on investment, it means maybe we have maybe either could be money in the account on the bank account, and maybe it's on fixed deposit, and bank maybe money, they give us some money at the end of the month or at the end of the year. So I'll just pick the 82,600, and it's what I will include here. Yeah, I can include it here. Now, I don't see any other income unless you see any that you can let me know, but that is what I see. So it means that even the total other incomes will be the same thing. Total other incomes will be the same thing. It will still be 82,600. And then the total of all this will be just this plus this, which is the 2723550. Basically that. So that is what I would get. And then I will now proceed to expenses. To my expenses. I'll proceed to my expenses. Now I'll just try to go back to my paper. Just a moment, stop share. I'll go back to my paper just to see some of the expenses that I might have. So when I look at this question, like I told you, there's kind of information that we've been given that we shall really not use even as we are going through. So cash is not an expense, bank is not an expense, retaining earnings, equity, capital, equity, this we've recorded it, this we've used it, investment. Now this 7% investment is actually the one that we are getting this interest on. This is an asset also. When we get down, buses, these are assets, computers, assets, garage equipment, asset, land is an asset. Now, when it comes to assets, the expense that we have on assets is depreciation, which depreciation we went ahead to calculate. So we shall record depreciation when we come to that level. Then we have repairs and maintenance. So repairs and maintenance is 200,000. Every time you see an expense here, yours is to run down just to confirm that there was no change in that value based on additional information. So when I look at the additional information, my eyes don't see anything to do with the repairs and maintenance coming up. So it means that repairs and maintenance, the way I'm seeing the 200,000 is the way I will carry it. So when I leave here and move to my expenses, I'll have repairs and maintenance. I'll put my amount here. This is 200,000, like that. So that is what happens with repairs and maintenance, simple as that. Then I'll go back. Salaries. Now salaries is 340,000. Salaries is 340,000. Now when I scroll down, 340,000, when I look at this question, there was something to do with salaries here. The 40 million on salaries was prepaid by the year end. Prepaid means part of it relates to the next financial year. Maybe you paid salaries in advance to your staff. So this 40 million has to be excluded from your 340 million. So ideally, when I pick my salaries here, salaries, stop share, salaries, and I come here, and I write, it was 340. Okay, I can even make the calculation here. So it was 340,000, 340,000, but 40,000 relates to prepayments. So what happens with those prepayments? If they had asked us to draw a balance sheet or statement of financial position, when I go to my current assets, I would include prepaid salaries of 40 million. So that's how the effect would be. So for the P&L, the effect is we just reduce our expense. So that is what we would basically do. So I will move to the next expense. The next expense we have, is utilities. The next expense we have is utilities. Utilities is also didn't have any change that happened. So I hope you have where you're picking the question from. In case you don't have the question, you can download these questions from the iSpower website. They are there, and you can find every question. But we are looking at basically, this is August 2018. So August 2018, the other expense we have is utilities, and the amount they have given us here is 15 million, which is 15,000 that they have provided us there. Now, the next expense we have is insurance premium. Insurance premium, and insurance premium, they have given us 150,000. Insurance premium, they have given us 150,000. Insurance premium is also an expense. Basically, either you're insuring your assets, either insuring your employees, whatever you're insuring. So it's an expense to the business. The other we have is fuel. Fuel was also just given the way it is. Fuel was given as 640. So we just right there, just try to copy and paste, and you get the marks. Can you imagine? Our accounting can be that easy. Just pick it from there and put the value. So then we have rent expense. Now, you remember we had some rent income where we sublent the parking yard. We also have some rent expense that we incur. Now, rent expense didn't have any additional information on it, because the additional information that we are given, additional information 1, that relates with subletting, is basically an income, which we wouldn't mix with a rent expense account. So for rent expense, you just come, write your rent expense there, and pick the amount. The amount is 88418 as it is, and you put it there like that. Then we move to license fees. License fees also didn't have any additional information. So you just write your license fees as they are there. They gave us an amount of 10,000 in the trial balance. So you pick the 10,000 and write it there. Okay, we proceed stationery. Stationery. So stationery, we have stationery 56,000. One time along my career, we had an argument on whether stationery should be regarded as an asset or should be regarded as an expense. And the reason why somebody was bringing up such an argument is because most people buy stationery in bulk. So they have a lot of stationery in their warehouse, maybe for the next 3 months or whatever. But stationery in normal practice is expensed. So stationery is an expense. Yeah, but other companies may wish to record them as assets, but it is stationery is an expense. Basically, every time you buy those reams of paper, expense them off. So yes, we have our stationery as an expense also. Stationery. They have given us 56,000. Stationery have given us 56,000. 56,000. Okay, right there. And now the other that we also have. Okay, I just want to share with you this paper. So we just try to go it through together. So I've been trying to go as the question goes, like I've coded utilities, insurance premium, fuel, rent expense, license fees, and then stationery. And all these, when I looked at the additional information down, there's no any additional information that relates to these. Now, I come down to depreciation. Now, this is provision for depreciation, and this provision for depreciation goes into, of course, you update it with the depreciation of this year, and you deduct these amounts from the values up when you are drawing up your statement of financial position. But for matters of the P&L that we are drawing up as requested by this question, we shall only take the respective depreciations that we calculated for each of these assets. So before I proceed, I think I'll just go on depreciation. Depreciation. So depreciation right there. So I'm going to break them down. You can add them up, but for matters of you getting the marks from these examiners, you can break them down. It has no problem. So I have depreciation buses. I have depreciation for the other asset I have is computers and printers. I have computers and printers. Then I also have a depreciation for, is this furniture? Yes, furniture. So I have furniture. Then I also have depreciation for the garage equipment. Depreciation. For the garage equipment. Yes, depreciation for the garage equipment. So I just want to pick what I had recorded. I think depreciation for the buses, I'd already calculated that. I'd gotten that amount. Depreciation for the garage equipment, I'd also gotten an amount. And then depreciation for computers and printers, I'd also tried to get an amount. Okay. Then the other was for furniture. Now furniture was 15% on cost, and the cost value they gave us for furniture is 10,000, 10 million. So 10,000 times 15%, 15% times 10,000 gives me 1,500. Yeah, so that is what I have. So I proceed down. Just okay. So when I proceed down here, mine is to find out what other expenses do I have. Mine is to find out what other expenses do I have. Just a moment. This paper doesn't want to show in my yes. So when you look at our question, you must have had this question in case you have a copy. We've tried to look at depreciation. So we now have the compensation for accident victims. It is an account on its own. Now we had an adjustment on compensation, but the compensation we had down was for luggage. Now you can choose to have a single account, but now since this account they went ahead to separate it, I also separate it so that may be, and sometimes they do it maybe for matters of analysis. Maybe you want to know what compensations are spent on accidents and maybe what compensations are spent on luggage. So I'm going to take this expenditure compensation, and then we also have court penalties. I'll also take this expenditure. Now, somebody will say even penalties are recorded. Yes, penalties are also recorded. But if we're in a paper like taxation, if you're calculating the taxable profit, penalties are not allowed by URA, so you wouldn't have to record penalties. So I just want to make sure that I only have this to record, these two to record. Then from this information, I also now this is it. You know, after you've done you've tried to input this information, it's important for you to think about the additional information. Now I was proceeding with you here. You didn't remind me of one thing here. So before we look at expenses, you see this first additional information? It has an income in its own. So in addition to this income that we have here, this income of transport fares, mechanical services, we got that revenue. And then we also had other incomes. We had 82,600. There is also an income on additional information one. And that is why you see it's important for you as you work with both the other information, but you also work with this. So every time you're doing a question like this, I think I don't know where am I? Okay, I'm right here. Sometimes you leave some space, you get it, under your revenues to make sure that in case there's anything else that comes up, then you're able to add it there. You get it, Yeah, but since I'm using Excel here, I can actually add this here directly and call this maybe sub-renting income. So remember in our journals, that was item A, where we looked at where we looked at revenue. We debited our sub-rent income and credited accrued rent income or outstanding rent income. So it was 8 million. So since our degree of precision is 1,000, since our degree of precision is 1,000, I'll take 8,000. So when I'm recording it in my, oh, this is my Excel. Okay. So I'll record 8,000 here. And that means that it will change this to be a summation of this and this. Yeah. so which will update my income. So that is why it is imperative for you to cross-check and make sure that you are doing that. So for the 40 million, this one we already adjusted when we are doing the salaries. We also did this. We are taking off. Included in the amount of transport fares was 10 million. We also had, I think we adjusted this when we are trying to record our transport fares. So this is the 2.5 that we are going to include in our expenses as well. So we have now two expenses remaining. We have this, and then the last expense to do with compensation of loss of passengers' luggage. So I'm going to pick compensation, this compensation, and take it to my Excel here. So this compensation of accident victims had no adjustment, and the value they gave us is 180,450, like that. And the other is court penalties. Court penalties. The value that we have for court penalties is 12,320. We have 12,320. And then we have, when you go down, you see we have our compensation for the loss of passengers' luggage. Compensation for loss of passengers' luggage. Can just call it compensation. Just write compensation and maybe in bracket loss of passengers' luggage. In bracket loss of passengers' luggage. So the value we have for compensation of loss of passengers' luggage is 2,500, because here they're giving us 2.5. So you basically write 2,500. You write 2,500 like that, 2.5, because we have a degree of precision of 3 zeros. So I hope we've not left out anything, because we've recorded this. We've also adjusted this. We adjusted this too. We also did this. And also when you look at our question app, we all did that. Let me just try to share with you this as well, so you're able to see what I'm trying to say. So we just tick off. You know, every time you're done with the question, just go through to make sure that you've not left out anything. Now, one of the things you have to know is that we are humans and we can leave out anything. So cash and bank, those were for the other, share capital, retaining earnings. These were not relevant in this question. Transport fares, mechanical services, everything, we really looked at them. Investment, this investment would also go into the balance sheet. These, we've all recorded all these basically. And you can also cross-check to confirm the amounts that we've recorded. You get it, huh? So the question was asking us for the profit and loss. So if you're to go back to your question onto what you're sharing here, you can go ahead to find the total expenses. You can find the total expenses. Total expenses. Total expenses. I'll use this column. Now our total expenses. So we get 3.6, 3623, like that. Then we shall have our profit or loss. shall get our revenue, which is that, yeah, and subtract our expenses to get that 901 negative 388. So this is a loss. So this is a loss. Yeah. So I welcome any questions. If there's anything that you would like me to clarify.
Ladies and gentlemen, I think we can end here. Thank you.